Hello and welcome to another video on my YouTube channel. My name is Joris and today I will be talking about the 20 stocks that make up the ATX index in Austria. And I'm also really excited that I can say that I crossed the 100 subscribers marker. So thank you to my 103 subscribers so far. And if you aren't subscribed yet and you like this kind of content, please consider subscribing to my YouTube channel. Normally, I don't say it in the beginning of the video. I only mention it on the back of the video because I also don't like it when people start talking about subscribing in the beginning of the video or in the middle of the video. But for this occasion, I make an exception. So thank you to my subscribers and let's get on with the video. So the ATX index, the ATX stands actually for Austrian Traded Index, and it's of course a benchmark for the Austrian market, and it contains the 20 most significant stocks on the Wiener Börse, and it's a smaller stock market like Belgium. Even, the market capitalization are even smaller than in on the stock market of Belgium, but it's definitely not less important for dividend investors, as you will see in a few minutes. But always remember that on dividend payments you also have to pay withholding tax. So for foreigners it's 27.5%. For Austrian people it's a little bit less. But for Swiss people we have a double taxation treaty with Austria, so we can credit it. So that's really important that you know that. And you have to find out for your own country. I can't find all the rules, of course. So you have to find out whether or not it's possible for you to also get the withholding tax credited for the Austrian stocks. But for Swiss people, it's definitely an interesting option. So I always rank the stocks according to their market capitalization in billion euros. And here you can immediately see I made it easier for myself as well. So in pink you have the energy related stocks, and Verbund AG, it's more in the renewable energy sector. It has the highest market capitalization of 25 billion and with a dividend yield of 4.71 and a payout ratio just above 60%. It's really interesting, this stock. Also the PE valuation is 13.3, so actually quite nice valuation. But of course here OMV, it's only 7.80 and the dividend yield is much higher and the payout ratio is just a little bit below the one from Verbund. And EVN also around 9, the PE. Dividend yield is a lot lower, of course, and the payout ratio is also a lot lower. So if you like more the sure side of the payout ratio, you can go for EVN. If you don't mind that the payout ratio is around 60% or just above, then the first two options are definitely an option too. And yeah, on the Austrian market you have a few banks, of course. So Erste Group Bank, Raiffeisen Bank, and Bauer Group. So Bauer Group, okay, they do more than just banks, but I think Raiffeisen Bank with a PE valuation of 2.50 is really interesting. You know what I always say, when you want to go for a bank, go for an ETF that invest in banks. But for Raiffeisen Bank, I really like them. They stay locally, and I hope that they stay true to their principle and that they don't close down the smaller banks that they have in smaller cities or Gemeinden. Because here in the place where I live, it's the only bank that is still here. All the other banks, they disappeared and you have to travel 15 kilometers or a little bit less, 10 kilometers to visit your bank. And there you're more like a number and in your local banks, at least they still know your name. So local banks, I think you should support them, and that's why Raiffeisen Bank, yeah, they are in my heart, in fact. So then Andritz AG, 6.3 billion euro market capitalization, payout ratio just below 50, dividend yield of just below 4%, and a PE ratio of 12.50. I think this company is truly an unique company that you can't find anywhere else. So what they do is they have production equipment, they have production plants, and they lend it out to other companies. So in a way, it's a tricky business because yeah, they have to renovate and they have to buy new equipment from time to time. So it can be a costly affair as well. But they do a rather yeah they do it rather good, and I like their company a lot, and they are definitely on my radar to buy in the next few months when I have money available on my U investment account. So this one, you know what is coming at the end of this video. They are on the winners list for sure. Then Telecom Austria, the payout ratio is actually rather nice compared to other countries. So where the telecom sector is has a higher payout ratio. So in that regard, Telecom Austria is definitely a contender. But yeah, the telecom business, they always have costs coming. Then they have to install 4G, then they have to install 5G, and then 6G is coming, and before you know it, 10G is there, and yeah, it's always cost. Renewing the cables that they have in the ground, and it's a tricky business. Here in Switzerland, Sunrise is coming back, and yeah, I'm a bit frustrated because Sunrise, when they disappeared from the stock market, they were a dividend pearl here in Switzerland. They are coming back, and Liberty Global, they know what they are doing. Yeah, they will put Sunrise on the stock market. They will invest a few billion, 1.5 billion, I think, to cover the cost that Sunrise will have. But all the rest is going to come from Swiss people that invest in it. They will expect a huge dividend, and yeah, they will get it. But then in the end, the same will happen as with Telenet. They will reduce the dividend, then the stock will go down, of course, because people aren't happy that the dividend is going down. And when the stock is down from Sunrise, Liberty Global will come and say that they will buy the company back. And like that, the Swiss people will lose a lot of money. And I hope that people don't subscribe that much in Sunrise. And I hope as well that CHDVD, my ETF that we buy for our children, isn't going to invest in Sunrise as well. But let's cross our fingers for that and stop with the rant about Sunrise and Liberty Global because what happened with Telenet in Belgium. But that's another thing. Um, yeah, Voestalpine, a PE ratio of 51.90. It's the highest one on the ATX, and the payout ratio is also above 100%. But that's because they are restructuring right now, and therefore their EPS is suffering, of course. So the EPS in 2022, 2023, and 2021, 2022, I think, was around 5.5. So if you look at that and you look at the price, then the PE ratio is more around 4, 5. So that's really interesting. But yeah, the EPS right now is still 0.42, so then it's not looking great, but maybe it's cheap right now. And I say maybe because it's not financial advice, it's just what I yeah, what I read, what I know. So I can only say what I know and what I think about the stock. So definitely not financial advice. And then we come to the page, of course, where we have negative earnings per share. So two in the retail sector have a negative earnings per share. Then you have lensing. What do they do? In fact, lensing, I have to look it up. It's textile manufacturing. So yeah, it's a business that has a lot of yeah concurrence in from Asian countries. So there it's a difficult sector. And then you have ATNS, Austria Tech and System Technology with minus 2.2. So they still pay out the dividend. I don't think that is actually that smart. So Immofinanz and Lensing, they aren't paying out a dividend, and I think that's really smart. Immobilienanlage, they can't not pay, they can't pay. How do I need to say that? They need to pay out a dividend, so that's why they have a negative payout ratio. So there I can still understand a bit that they pay out the dividend because they have cash flow, of course, so they can pay out a dividend from their cash flow. But with the negative earnings per share, I don't like to see it. So that's why the retail sector is always a bit cringy to me. Then the 10 best stocks according to the PE ratio. Yeah, here with 2.50, Raiffeisenbank is way ahead of all the other ones. But look at that, it's the first 10 and they are all below 13. So that is actually quite crazy. And if you look at the dividend yields, they are quite nice as well. So I think Austria is definitely a heaven for dividend investors. You can definitely build a balanced portfolio there. So, okay, you have to look that you don't go into bank, or insurance. Pick one of them, and you can have a dividend yield of above 4%. So with the 300 rule that I have, I think yeah, Austria is a great country to invest in. You have oil field equipment. That is a difficult one for me. If you look at the PE valuation, the dividend yield, and the payout ratio, you would immediately say, yeah, it's great. But look at the market capitalization; it's only 483 million euros. So if the top pot of euro millions is 200 million euros and you win it, you can almost buy half of oil field equipment. And actually, I don't know a lot about oil field equipment. So when you do and you understand the business and you like what they are doing, yeah, Blackman oil field equipment, it's really an interesting company to invest your money into. And then yeah, Telekom Austria and Andritz are here as well. So Telekom with less than 40% payout ratio, it's interesting, but no, telecom business is a costly business as well. Then the 10 best stocks according to the dividend yield. You could already see it in the previous slide that the dividend yields are rather high. So in the energy sector, OMV with a dividend yield of almost 8%. And then, yeah, insurance companies like Unica and Vienna Insurance Group, They also have a nice dividend yield with more than 7.5 and more than 4.5, and a payout ratio that is also more interesting than in other countries. So in Switzerland, it's 60 or 80% that they are paying out. So here it's less than 50% and less than 32%. So that's really nice. The post business, yeah, that's a bit more difficult. Also, the payout ratio is 91.28%, so that's rather on the high side. Then, when you want to go and invest in the post business, I think it's better to go for DHL in Germany. Then the 11 best stocks according to the payout ratio. So exactly 11 stocks have a payout ratio that is less than 60%. And the top contender is Do & Co. Aktiengesellschaft. So what they do is catering. And yeah, when you have, for example, Avolta in your portfolio in Switzerland, and you add Do & Co. Aktiengesellschaft, then in fact you have more than 60% of the airway business. You can then also buy Zurich Flughafen, for example, and Airbus, and then you have 100% of the flight business. But Do & Co, yeah, they do catering all over the world. They do it great. The only thing that I can say is that the PE ratio is now a bit high to my liking. So if they are around 18, I definitely would put them on my list to buy them. But for now, they are not on the list. They are definitely on my watch list, but not on my to buy list now. Andritz AG, yeah, that's a company that is definitely on my to buy list. I like that one. And what else can I say? Yeah, it's uh it's an interesting one. You have here EVN AG. On the previous page, you have OMV and Verbund because the dividend yield is higher. But here, with the lower dividend yield, comes also a lower payout ratio. So it's up to you what you like more. And then the 11 best stocks according to the dividend yield and with a payout ratio below 60%. Because we had 11 stocks with a payout ratio below 60%, I just ordered them according to the dividend yield. So here you can see that insurance and bank companies, of course, rule the world when it comes to dividend yields. So there you have to look at what you like more. But as I already said, ETFs for bank investing is more the things that I would advise. Except of course Raiffeisen Bank. Maybe I'm going to pull the trigger on that one as well in the coming months because I need to support the local banks as well. And yeah, Andritz is here again, and Meyer Mellenhof Karton and Do & Co. Aktiengesellschaft close the row. But that's because the dividend yields are lower. But in fact, yeah, Do & Co. payout ratio below 20%. Dividend yield is low, but it's going to grow because it's picking up again with the air business. They struggled in 2019, 2020, of course, with the COVID pandemic, and 2021 as well, because everything was closed down. But now they are picking up speed again. So is Andritz the winner? Well, it's a special company. They have process technology, equipment, and systems and plants. So not plants, actually the plants that grow, but the buildings where you produce things in. And if you look at the evolution in the past 5 years, yeah, even in the COVID pandemic, in the SARS-CoV pandemic, They went down, but they still held up quite reasonably. So they went down from 40 to around 22, 23, and now they are up to 63 again. So they are now at our all-time high. Maybe you think, yeah, it's too expensive right now. I can wait until it's around 48 again. I'm looking at that as well, but graphs and looking at when you should buy a stock, that's always a bit tricky, because when it goes up, it goes up. And here it was on top as well. Here it was on top as well. Here as well. So now you are above it again, but you never know whether or not it's going to drop. And I will only buy of Andritz, I will only buy one stock. So for 100, how much does it cost? 142 right now. I know it's 63.6. So I can buy 3 stocks maybe, and then I invest less than 200 euros, and yeah, that's which is the one in fact that has a price of 140. Ah, it's Do & Co, yeah. That's why I was confused, because I talked about Do & Co as well before I talked about Andritz. But so I can buy 3 stocks now, and then when it comes down and it loses 20%, I can buy again, and then when it runs up, yeah, I average down, so that's no big deal. In fact, for me, it's a dividend that counts, and that I buy with a good PE right now, and that their outlooks are good. So for me, Andritz definitely fits the bill there, but I need to have money first, of course. And Voestalpine, yeah, look at this. Over the past 5 years, it lost around 5%, and the EPS is down right now, of course, and the first quarter of 2024-2025 wasn't good as well, because they are selling off Buderus Edelstahl. So that's a factory in a steel production plant in Germany that they want to detach, because they want to go more to the special technology again, or I shouldn't say again, but they want to orientate more into the special technology and sell off their older technology, being the steel business. So the earnings per share has to go to 4.5 again, and then the current valuation is definitely really good. And from this one, yeah, maybe I'm going to buy this one first and see where Andritz is going. But definitely Voestalpine is one that is on top of my list to buy. And then later on, when I receive the dividends and I want to get back the withholding tax that I need to pay extra on the dividend, I will make a video about that, how you have to do it for Swiss people. And thank you for watching to this one. Please subscribe to my YouTube channel if you haven't already done so, and hit that like button as well. It helps out the channel enormously, because then the video gets distributed to other people that like this kind of content as well. And with that being said, thank you for watching, and see you on the next one on my YouTube channel. Bye.